What happens when a famously tough activist investor jumps into a struggling tech stock? Well, that's exactly what's playing out right now with Workday, a major name in workplace software. And with Wall Street watching closely, the big question is this the shakeup Workday needs to finally turn things around? Let's break down what's going on. Workday is a company you might not use personally, but it's a giant in the world of business software. They help big organizations manage human resources, payroll, and finances. Basically, the behind-the-scenes stuff that keeps companies running. Think of it as the digital backbone for thousands of employees' paychecks and benefits. But despite being a leader in its space, Workday's stock has had a rough year. So, what's the problem? Workday's share price has lagged behind other software companies in 2024. While the broader tech sector has surged thanks to excitement over AI and cloud computing, Workday's returns just haven't kept up. Investors have grown frustrated, especially as rivals like ServiceNow and Salesforce have posted stronger numbers and more impressive stock gains. Enter Elliott Management. If you're not familiar, Elliott is what Wall Street calls an activist investor. That means they buy up stakes in companies they think are underperforming, then push hard for changes, anything from cost-cutting to reshuffling management, or even breaking up the business. They're known for being aggressive and persistent, and when Elliott gets involved, things usually get interesting fast. According to recent reports, Elliott has taken a significant stake in Workday. They haven't said exactly how big, but their moves are rarely subtle. They want to make their presence felt. For Workday, this could be the wake-up call management needs. When an activist like Elliott comes knocking, it often leads to real action, not just talk. Now, what exactly could Elliott want from Workday? There are a few possibilities. First, they might push for sharper cost controls, cutting unnecessary spending or streamlining operations. Second, they could demand changes at the top, maybe new faces on the board or even a shakeup in executive leadership. But most importantly, Elliott will be laser-focused on unlocking more value for shareholders. That could mean encouraging Workday to invest more aggressively in new technology, especially artificial intelligence, or even exploring strategic options like partnerships, acquisitions, or spin-offs. And speaking of AI, that's another big piece of this puzzle. Workday itself has already announced it's doubling down on artificial intelligence initiatives. They know that staying ahead in business software means making their tools smarter and more efficient. Imagine HR software that not only manages payroll, but also predicts staffing needs before they happen, or finance tools that can spot risky spending in real time. That's the kind of future Workday is betting on, and investors like Elliott will be watching closely to make sure those bets pay off. Let's put this all in context. The workplace software market is fiercely competitive, and the winners are the ones who innovate the fastest. Over the past decade, we've seen how companies that embrace new tech, like cloud computing and AI, can leapfrog their rivals. Remember how Microsoft transformed itself by pivoting to the cloud with Azure? Or how Salesforce became a juggernaut by constantly evolving its platform? Workday is now at a similar crossroads, but there's also risk. Pouring money into AI isn't a guaranteed win. It takes time, talent, and a clear strategy. Some companies get lost in the hype, spending billions only to end up with products nobody wants. Investors want to see real progress, new features, satisfied customers, and, most importantly, stronger financial results. So, what's likely to happen next? First, expect some tension between Workday's management and Elliott. These activist campaigns often start behind closed doors, with tough conversations about what's working and what's not. If progress is slow, Elliott could go public with their demands, and that can ramp up pressure on the company to act quickly. We might also see other investors jump in, either to support Elliott or to defend management. That kind of public drama can move the stock price, sometimes sharply. On the other hand, Elliott's involvement could serve as a confidence boost for the market. It sends a message that there's untapped value in Workday and that serious investors believe the company can do better. Sometimes, just having an activist in the mix is enough to get management moving faster on changes they already had in mind. At the end of the day, both sides want the same thing: a stronger, more competitive company and a higher share price. Historically, activist campaigns in tech have produced mixed results. In some cases, like when Elliott got involved with eBay or SAP, the company made big changes and the stock responded positively. In others, the fights dragged on and didn't deliver much for investors. What's unique here is that Workday is still growing, still profitable, and still a major player. It's not a turnaround story, but more of a how do we get to the next level situation. For those watching from the sidelines, this is a moment to pay close attention. Will Elliott's involvement light a fire under Workday, helping it innovate faster and boost its stock? Or will it distract management from its long-term plans and introduce more uncertainty? The next few months will be telling, especially as we see how Workday's AI efforts pay off and whether the company responds to Elliott's pressure with real change. Let me know what you think. Is Elliott's move a positive sign for Workday or just a recipe for boardroom battles? Are you optimistic about Workday's AI future, or do you think the competition is just too tough? Drop your thoughts in the comments below, and don't forget to like this video and subscribe for more insights on the biggest stories in finance and investing. As always, keep an eye on the headlines, because sometimes all it takes is one bold investor to change the game.